Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, we're taking a deep dive into Microsoft, ticker symbol Microsoft, a true titan in the tech world. It's July 29th, 2025, and there's a lot of buzz around Microsoft, especially with its fiscal fourth quarter 2025 earnings report scheduled for tomorrow, July 30th. Analysts are anticipating robust growth, projecting an EPS of $3.38 and revenue of $73.81 billion, which would mark a substantial 15% and 14% increase year-over-year, respectively. This strong outlook has fueled a strong buy consensus from Wall Street, with an average 12-month price target of $557.56, suggesting an upside of over 8% from current levels. However, it's not all clear skies. Concerns about ongoing supply and demand imbalances, potentially increasing capital expenditure into FY26, have been flagged by some analysts. Key drivers investors are keenly watching include Microsoft's ambitious AI spending, the performance of its Azure cloud platform, and the monetization of its AI assistant, Copilot. The recently launched Copilot mode in the Edge browser highlights their commitment, but uncertainties around the OpenAI partnership, with reports of OpenAI exploring other cloud providers, add a layer of complexity. Now, let's turn our attention to the charts to see how these fundamental narratives are reflected in price action. Looking at the daily chart, we can see Microsoft has experienced significant volatility. The stock saw a sharp decline in late April 2024, dropping from highs around $409 to nearly $389 in a single day, followed by further depreciation. This could be attributed to broader market corrections or specific concerns around their cloud spending at that time, though it recovered well soon after. We then observe a strong uptrend from early May 2025, with consistent higher highs and higher lows. The price surged from the $430s range to test resistance levels around the $490 to $500 mark by late June 2025, indicative of strong bullish sentiment driven by AI optimism. The 52-week high of $518.29 was recently touched on July 25, 2025, just a few days ago, before a slight pullback. This level now stands as a critical short-term resistance. Zooming into the one-hour chart, we get a much clearer picture of recent trading activity. From July 24th to July 25th, we observed a strong push towards that 52-week high. However, following the high on July 25th, there's a visible reversal, with consecutive bearish candles indicating profit-taking ahead of the earnings call. Notice the volume increase on those downward moves, suggesting more institutional selling or shorting. The price has pulled back from $518.29 to current levels around $512.50. The $510 level appears to be acting as immediate support on this hourly time frame, having been tested and held in previous sessions. A break below this could signal further downside in the very short term. Now, let's narrow our focus even further to the 15-minute chart to capture the most immediate price action. We can see here how the stock initially rallied strongly on July 25th, breaking through $517 and pushing to the daily high. However, the subsequent candles show significant selling pressure, forming lower highs and lower lows, which is a clear short-term bearish signal. The most recent trading on July 28th shows the price consolidating around $512 to $513, suggesting a tense standoff between buyers and sellers. The volume on these recent downswings is elevated, reflecting heightened investor anxiety as the earnings report looms. For day traders, monitoring this tight range between $511 and $514 will be crucial in the hours leading up to the market close today. A breakout in either direction could be very telling. Recapping our analysis, Microsoft is currently trading around $512.50, just below its 52-week high of $518.29. The nearest significant resistance is that $518.29 mark, and beyond that, the average analyst target of $557.56. Key short-term support levels to watch are $510 and then $505, which, if broken, could lead to a retest of the $490 to $500 area. In the short term, a bullish outcome hinges heavily on the earnings report tomorrow. If Microsoft exceeds analyst expectations, particularly on AI and Azure growth, we could see a strong push towards the $518 and potentially $525 to $530 levels, with a 70% likelihood. Confirmation of moderating capital expenditures could reinforce this upward momentum. Conversely, if earnings disappoint or if the outlook on AI spending or the OpenAI partnership is murky, we could see a sharp correction, possibly retesting the $490 support, with a 60% likelihood. This, by the rumor, sell the news phenomenon is common around earnings, so prepare for increased volatility regardless of the results. In the long term, Microsoft remains a strong buy for many due to its leadership in AI and cloud computing, making any significant dips potential buying opportunities. Investors should closely watch the earnings call for specific metrics on Copilot monetization and Azure growth rates. Pay attention to the broader market sentiment as well, as tech stocks are often sensitive to macroeconomic news. Finally, look for post-earnings analyst revisions and any updates on their OpenAI partnership, as these will guide future price action significantly. Thank you for joining Explain the Charts for this in-depth analysis.